Hello and welcome to another edition of Real Talk. I apologise for my voice. I actually had to cancel poor old Noel and Amanda from MK Tax last week because I couldn't speak at all. Anyway, good news week. Markets all over, even though there's a bit of a rumble and tumble to settle for June 30. The Australian market, the stock market closed about 2.5% up, which was brilliant. In terms of globally, the bond market is up in most financial sectors, and that really is a great sign of governments going out for monies to work on infrastructure. And I think most major cities at the moment would agree, Melbourne included, infrastructure is what we need more than anything at the moment. But the property market, despite all of those perma bears out there, permanently negative people about the property market, we continue to be extremely strong here in Melbourne. We closed just a smidge under 69% again on the weekend, with a lot of properties having sold before auction, which obviously drives that percentage higher. Of course, no more stamp duty savings for investors as of July 1, but we're actually signing about 3 contracts this week, so it certainly hasn't slowed any of our investors down. And a lot of our investors buy ready-built properties anyway, opting for not going off the plan, so I can't see that it's going to slow things down here at all. Some fabulous reporting though about this oversupply, undersupply ongoing debate here in Melbourne. And as you all know, I've promoted that I believe we're heading for a massive undersupply. And Michael Pascoe has just come out this week in one of his blog, thanks to one of my clients for sending me that, saying that we're going to have a tsunami of undersupply. And it's really fascinating because what they're talking about is rather than look at the total population, they're talking about referring to sectors of the market, which I'm a big believer in, because if you look at different sectors, you've got, we're always talking about baby boomers, we're talking about Gen X, we're talking about Gen Y, we're always speaking about the downsizers. So if you actually look at the people coming into the market, there's 360,000 people in the 25, 26, 27 year age bracket all the way to 36 years of age, and it peters off at about 39. So if you look at, there's 14 years of population in each sector, 360,000 people, which accounts for about 4.2 million people, all would be home buyers. So that is a massive amount of people. On average, they've got around $450 to spend. On average, the house pricing that they want to where they want to target is about $600,000. So the problem continues with how to get our first home buyers into the market. And once again, I say to all my clients, don't just invest for yourself today, invest to help your children buy property and your grandchildren, which is obviously key. But there's certainly no slowing of the marketplace. And we're starting to see 2-bedroom apartments coming on and townhouses. I can't get a townhouse at the moment for clients under $620,000. The average price point for a townhouse in the area that my clients want to buy is about $680,000. So it's now getting really tight for investors as well. So we're having to get smarter about how we go about doing things. Talking about smart, it's tax time. So I know I have already put my accountant on notice that I'll be lodging an early tax return this year. So once again, I go to my receipt box for all my miscellaneous receipts. I run every property with its own account so that all the bank statements, the mortgage statements, the rental statements pretty much make up my tax return for each property, which I refer to as an entity, and then any sort of miscellaneous expenses that I may have captured. I love my Dropbox, and I've got my Dropbox set up so that any properties that have settled in the last 12 months, I've got the loan offer document, which often captures important information. I've got my mortgage documents and of course all my statements. So it's a really great time. It's so cold at the moment. Great time on a Saturday or a Sunday afternoon just to pop in your study at home and start sorting out your tax. And really the best thing about being a lean in and engaged investor is being on top of things. So why don't you start thinking about setting a date of getting your tax in by August 15, for example. And I'll have Noel and Amanda next week to give us some top tax tips. Okay, thanks again for listening. Have a great week, and I'll see you next week. Bye-bye.